Hey everyone, got a lot of private messages on YouTube and I appreciate that. And I just wanted to respond to a couple of the questions. Received a lot of questions how to investigate, how to do your own investigation of a penny stock company that you might be interested in becoming involved with. And then also, of course, that investigation is also known among the trading community as your due diligence. Do your own due diligence, also known as your own DD. So how do I do it? And again, this is not a recommendation to buy or sell security. I'm posting this for entertainment purposes only. But what I've found, and I did of course trade big board stocks in the past, so I already had an understanding of how the stock market works. But I've gained even a greater understanding of how the stock market works and what moves individual companies by playing penny and sub-penny plays. So what I did to first become knowledgeable and develop that initial set of knowledge necessary to play penny stocks, because they're a different animal. Penny stocks, for the most part, are not a long-term investment. There are exceptions. Penny stocks, for the most part, are buying in at the right time, riding up potentially, possibly a huge percentage on the momentum. All the buys that are coming in is going to make that price per share skyrocket, sometimes hundreds of percent in one day of trading. So it's unusual to see that same percentage increase in the big boards. But what I do, and I've been doing this since I joined the forum Investors Hub, and there's a lot of stock forums out there. I personally enjoyed Investors Hub. I started out with a free account, and basically all I did is navigated around through the various boards and tried to find some place to get my feet wet. Well, you know, you learn the hard way. I mean, initially you want to buy a bunch of stuff, and you end up buying a lot of companies that just go to no bid. So in essence, you couldn't sell them if you wanted to. But also along the way, you make some significant gains. I mean, we're talking a few thousand% gain per company, which really feels nice. What I would recommend doing, the best way to become familiar with this, not only to do your own investigation, but to add to your own personal level of knowledge when it comes to penny stocks, is find the people on those forums that seem to be well respected. And I keep using Investors Hub as an example. There are other stock forums out there, but I use it as an example because it's one that I personally like. And on Investors Hub, you can see how many people are following a member. Someone has a few thousand people watching them on Investors Hub. They likely are somewhat well respected, or they wouldn't have that many people watching what they do. See how many posts a person makes. Go in Investors Hub, you can actually see the post history. You can read every one of them that's public, and you can get a feel for the level of knowledge that trader may have. Then you can also look at other people's responses to that person's post. Are they positive for the most part, or a lot of them negative? That can help one to establish a trader on the forum their level of credibility. Because more than likely, you don't want to follow someone just because someone has a lot of posts. They could be a pumper, so they could be posting hundreds of messages a day in a particular stock forum to try to pump the stock. What these pumpers usually do, they'll try to raise buying interest so that other people will buy in and they'll profit from it. So they'll try to get a flood of buys, and the price per share will hopefully appreciate. When it does, they get out, and everybody else that got in, if they don't exit quickly, they're out of significant loss more than likely. On the flip side, you got the bashers, the people that are always negative in the forums, and they're trying to drive the price per share down of a company because they may be personally aware of a material event that's upcoming, and they may have missed that inexpensive entry point, so they're trying to drive the price per share down to get in themselves before what they feel is going to be a huge run-up in price per share in the very near future. So that's another thing to be aware of. And don't feel like you're mooching off of someone else's knowledge. if you choose to participate in these stock forums. I know with Investors Hub, for example, there's a free account which works fine. I think you're just limited to your private messages you can receive, and then there's a premium account, which is affordable price per year. I don't know exactly what it is. I'd say it's $70 or $80 a year, which if you're trading stocks and and you're not able to afford that $70 or $80 a year membership fee, then you probably shouldn't be trading those penny stocks to begin with. But the premium membership with that particular service isn't required. I like it because I like to private message a lot of people as well as the public messages. So on Investors Hub, I follow a lot of people. Since I've been doing it for many years, I've established a list of contacts on there that basically every day I'll get in and see what they're posting in, which stocks, and then I'll go in and do my own due diligence. I'll see which stocks they like, see how many people that they've chatted with that I may have befriended on this Investors Hub. See what their opinions are, and then I'll go in and do my own due diligence. So I'll go to otcmarkets.com, for example, see if the share structure information on there is current. If it's not, I'll get the transfer agent's name from OTC Markets website. I'll call them, see if the transfer agent's gagged. If they're not, I'll ask for the current share structure so that I can decide if the stock I feel is too diluted to even waste my time on. If it is of good share structure, what I'll then do is I'll go out and read the recent news from the company. I'll check the forums, not only from the person that turned me on to it, but I'll check the posts from other people in the forums to see what their opinions are about the company. So, and the way to think of this when you're looking at share structure, if you've got an ocean, let's just say from the United States over to Europe, and 10 people jump in it, the waves aren't even going to be noticeable. But if you've got a small glass of water and you try to make 10 people jump into a glass of water, it's going to create chaos, and that's what happens with this stock. So when you've got a company with good share structure, not diluted, excellent share structure, you get a surge of buying interest, and the buying interest could be from these big players on the forum or whatever. If you've got a stock with great share structure where people get in at the right time and enough people get in simultaneously, it's going to create a storm. And that storm could be hundreds of percent increased price per share per day, thousands of percent increased price per share per day. And that could even continue throughout the course of a week or month or whatever, and mix in some official press releases from the company and or significant verifiable material events. And a sub-penny or penny stock could easily run to the multi-penny, if not multi-dollar range. So that's how this works. There's no real science to it. I wish I had a 100% 100% correct answer that would work for every scenario, but I don't. But this is the due diligence that I perform. And as much as I can reiterate this, never trust anyone. Because even the people that are well respected, everyone for the most part has their own intentions, whether they publicly express those opinions or not. Almost everyone has their own hidden intentions, and that can be more than likely it's for their own best interest. So they may know something, even though they may be promoting a stock, saying that this press release is coming a week from now. They may know in the back of their mind that it's going to fail because of a certain event. But even with that being the case, they may promote the stock on the forums, get a surge of buying in, and they may exit quickly before the stock tanks. So keep that in mind. Always expect to lose 100%, and I do mean 100% of any penny stock speculative investment, or an investment in any company for that matter. Big boards aren't that much safer. They just don't tend to swing as rapidly. So I'm trying to think of anything else. I mean, I've gone over the forums. The forums are personally my key thing. That's my springboard for all my research. That's how I find what I want to get in on. That's how I follow up on what I'm in on, and that's a strong factor that comes into play when I decide when and if to exit a position. That combined, of course, with my own due diligence on by reading the official press releases and whatnot, because I don't want to get stuck holding something. And keep in mind, sometimes, even though you're up a few 100%, you may want to sell. It's like, wow, I made a few 100%. But then that thing could run up thousands of percent. You could be kicking yourself. So establish before you get into something what your comfort level is with that speculative investment. So, if you get in something and you're up 20%, maybe you want to get out. Maybe you're up 20% and you want to get out. If it dips back down to 10%, put in a limit sell order. Hopefully that'll execute. Hopefully you'll get out for a 10% gain if it quickly tanked. Just a lot of things like that to keep in mind. And again, if you have any questions, let me know. I'll feel free to. I'll be more than happy to post a follow-up video and answer anything that I may be familiar with. But yeah, forums are my main start for all my due diligence. But thanks for tuning in. Have a good day.